Hey everyone, we got some massive news out of PayPal in the first conference call that the new CEO held with investors. You're not going to want to miss this because this really highlights the strategy, the direction that the new CEO wants to take PayPal. So let's jump right in with this big news.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Starting with this statement here from the new CEO, talking about saying, "We are not searching for ideas for tremendous growth. Our assets, our position in the market are incredible. We know exactly what needs to be done. We simply must execute." So far, I like what I'm hearing from the new CEO. They're not going for big, ambitious targets. They're just focused on incremental growth, and we'll see more of that from the new CEO in the following statements. So, the new CEO sees the business falling into three customer categories, and that includes consumers, small businesses, and large enterprises. And so, for each of those customer categories, PayPal wants to offer services and improve market share. So for the consumer side alone, in the US alone, over 70% of the adult population has used PayPal in the past 5 years. And that's true. In 2020, mobile wallets accounted for roughly half of global e-commerce transactions, and that percentage is much larger in the US. More folks in the US use PayPal as a proportion than almost any other country. Germany has a high penetration rate as well. Surprisingly, PayPal has a strong penetration in that market, but in the US, that's PayPal's strongest market, and online is PayPal's strongest category in that market. So one of the ways PayPal gets people to use its namesake as a payment service is by offering some incentive. The PayPal Cashback MasterCard provides 3% cashback on PayPal purchases, as well as cashback on other purchases. Customers who use this card on average spend 56 more purchases with PayPal in the year after they adopt the product than they did before. That makes sense because now when you've got this cashback credit card, and 3% is one of the highest cashback rates for any credit card without going into categories, right? Some credit cards will offer you 5%, but only in a certain category, not 3% on overall purchases as long as you use PayPal. So one of the reasons why people spend more money when they get this is because they consolidate all their spending on this one credit card because it offers nearly the highest rate. Unless you're looking at outside categories, then you can get a higher rate. But according to this data, it seems like consumers are consolidating purchases once they go with the PayPal Cashback MasterCard. The CEO goes on to say that they're gaining ubiquity both online and in person as their PayPal and Venmo branded credit and debit cards can now be added in Apple and Google wallets. That's a key for PayPal, and that's something that I've been talking about for a few years now with PayPal is gaining more traction in person. Right? PayPal has a strong hold, as we talked about already, with online purchases, but if it can make incremental gains for those in-person spending occasions, that will be icing on the cake because investors are not counting on that longer term. PayPal offers the most convenience when you're using it to shop online, and the data suggests that consumers prefer using a mobile wallet when they're spending money online, and they prefer spending a credit card when they're spending in person. And that makes sense intuitively, right? Think about when you're shopping online, you can either use your PayPal login and password, or if you're using your phone, you can just log in with Face ID and make a purchase. Compared with if you're spending with a credit card at a store you haven't visited before, now you've got to take out your credit card, put in all the information, look at the back, all that takes more time, less convenient, and so understandably, PayPal has greater market share when people are spending money online. For small businesses, the core customer problem they can solve is helping them get more customers. From a breadth and depth perspective, we again have tremendous reach. We serve approximately 35 million merchant accounts, and the vast majorities are small businesses. PayPal has over 400 million monthly active users, active accounts. And so for merchants, if they accept PayPal as a payment method, that opens the door for those hundreds of millions of PayPal customers with a PayPal wallet that will be more inclined to spend money at your website. More inclined to spend money at your website. So that's the selling proposition to go to small businesses and say, hey, why don't you accept PayPal as a payment method? It'll open the door to over 400 million active accounts. And so that's where PayPal is gaining traction. And honestly, this is where I would like PayPal to spend more of its energy is in growing the number of merchants that accept PayPal as a payment method. Really knock on doors, make the phone calls, get these small businesses to accept PayPal as a payment method, make it easier to onboard new businesses, and that way expand the reach of PayPal as a destination or as a platform that can be used when you're making purchases online, which will then make it more attractive for for consumers to sign up to PayPal and have PayPal as a payment method. Because if you keep seeing PayPal accepted everywhere, you're going to be more interested in taking the time to sign up for PayPal because you're seeing it being accepted in so many different places. And then lastly, for their enterprise customers, these are big, big businesses. In the last 12 months, they have processed over $450 billion in volume out of an estimated $4 to $5 trillion in global large enterprise e-commerce. So approximately 10% is flowing through PayPal. That's a meaningful market share of a massive industry. And so that's a nice headway. That's a nice starting point for PayPal to branch out from and offer more services to these large enterprises, utilize the transactional data, use that to fuel their systems, use that to connect customers with enterprises. And so this is an area that is growing nicely for the company, and it's got a nice entry point, and hopefully it can make more progress, more inroads within these large enterprises. Further, the CEO highlights that their data and scale are key strengths, and you'll see us using our data and advances in generative AI in responsible ways to further connect our merchants and consumers together in a tight flywheel. This is good to hear. I'm pleased to see that the CEO has highlighted this opportunity where they have all this transactional data between their merchants and customers that they can utilize to make connections and profit from those connections, generate incremental revenue, make it more convenient for customers, and be more helpful to customers by highlighting things that they would be interested in purchasing and highlighting businesses that offer those services, and thereby reducing search time for customers and earning a nice fee, a nice profit for that service. But in order to maximize on this opportunity, it'll require technology consolidation and automation across the company. Simply put, our cost base remains too high and is actually slowing us down. Hint, hint, job cuts are on the way. Job cuts are on the way. Our cost base remains too high and it's actually slowing us down. So this is a way CEOs like to frame job cuts in saying, you know what, it's not just that we're trying to save money, it's that, we have so many people that it's slowing us down. People are getting in each other's way. So for that reason also we need to make some job cuts. It's not just that we're trying to save money and make more profit. We're not bad guys like that. We're not just trying to profit off, make as much profit as possible at the expense of firing people, but it's going to help the company because it's going to get people out of each other's way. And also, this is something that maybe, the previous CEO would have been more hesitant to do because the previous CEO has been around for several years and so has built relationships with many of the individuals working at PayPal. And so firing some of these individuals, maybe they've become friends, maybe they've become really close. And so the previous CEO would be less enthusiastic about making massive job cuts. A new CEO coming in, it's a clean slate. You could come in and say, all right, we've got a few too many people. Let's reduce this. Let's bring this down. And so while that might be bad news for some of the people working at PayPal, it sounds like it's going to be good news for investors because that's going to boost profitability with a lower expense base. And finally, the last thing I will highlight is perhaps my most favorite thing that I heard from the CEO, the thing that I would be most attracted to if I was a PayPal stock investor, is the CEO highlighting the long-term target, the long-term strategy perspective, saying that I can tell you right now, what I care about most is high quality customer growth and profitable revenue growth. Boy, is that music to my ears. So few CEOs talk about profitable growth and high quality customer growth that I really am attracted to companies that are focused on this type of growth. Other companies, they like to grow. Growth is something that is attractive to many companies. They spend millions of dollars aggressively investing in growth opportunities and highlighting that, oh, if we achieve this growth, it's going to be so great in the long term because the opportunity is so massive and this and that. And what often ends up happening is you fast forward several years or fast forward several quarters, that same CEO will come back to investors and say, I'm sorry, I messed up. I thought the opportunity was big, but you know what? This happened and that happened, and it turns out we lost billions of dollars on those investments. I'm sorry, I messed up. Or it wasn't my fault. The macroeconomic environment changed and it didn't turn out the way we had planned. There's so many other excuses that will come out of management teams after they spend billions of dollars aggressively investing in opportunities instead of more focused growth, more profitable growth, more orderly growth, focusing on the core business, high opportunity areas, and serving customers that you are best fitted to serve. Customer selection. I feel like it's been a forgotten theme in U.S. companies ever since uh, the trillions of dollars of stimulus that went into the economy and businesses, and these low interest rate environments for the last decade really encouraged businesses to just go after fast growth, this blitzkrieg growth opportunity where they try to retain massive market share, and then we'll think about profits sometime later on. It's not important right now. Let's just focus on market share. I don't like that as an investor. Those aren't areas I like to invest in. This is more suited for my style of investing, where a business really focuses on those high value customers, those customers that they are best suited to serve. And if you're going after those customers, you can serve them effectively and profitably. And so I like to hear this, and I'm happy to hear this from the new CEO. All right, well, we got a lot of insight from this new CEO's perspective in the direction he wants to take PayPal. And so far, I've got to say, I'm pleased with the direction. The two biggest things I'm happy with is the tightening of the belt, reducing expenses, perhaps some layoffs coming down the pipeline, and then focusing on profitable growth, high value customer growth, not just investing in customer acquisition, just to grow the numbers of customers. So far, I like what I'm seeing here from PayPal's new CEO. But before I let you go, if you gained any value from this video, please subscribe to the channel. It really helps me make more videos just like this one. Thank you so much for watching.